And that means we are now live here on our YouTube channel. It's our daily market show. We call the Halftime Report, presented by Tackle Trading. And welcome out to the show here on a Monday to start the very first trading day in May. Markets are bouncing to start the week. We're going to break all the action down one step at a time, look at the sectors, go through some company news. Berkshire Hathaway reported earnings over the weekend. We'll talk about what's going on there from their recent event as well, their annual meeting that they hold between, Charlie Munger, Warren Buffett, and the entire community. We'll discuss some of the comments out of that. And then we're also going to have a round of the commodity corner later in the show where Coach Mark is going to highlight silver, which is having a very, very nice day here today. Welcome out to our community. Veterans, you know exactly what to do right now. Hashtag Team Tackle in the chat. Let's have a fun, exciting, energetic show here on a Monday. And let's bring the coaches in to introduce everybody. Coach Matt, Coach Mark, and myself, as always on Monday. Matt, how are you doing today, sir?
You know, Tim, if I'm doing as good as Buffett at 90, and I'm talking just from a mentality perspective, just from if I'm that active, that awesome at 90, done good. Man, I like Buffett weekends.
Dude, I think, what is Munger, like 98?
Munger, I think Munger's, he's a little older than Buffett. Buffett's rocking 90, 91. Munger's probably mid-90s.
Yeah. But both of them energetic, lively, talking about assets, talking about investing. It's really, really amazing thing in our life, frankly.
And honestly, it's like a lot of people, sometimes you agree, sometimes you disagree. But with Buffett, when Buffett and Munger speak, even if you disagree, man, you should always be open-minded to what they have to say.
Mm-hmm. I agree 100%. They had some comments on inflation and Bitcoin and trading and speculation. And I think whenever those two guys have, comments about what's going on in the world we live in right now, yeah, you better listen. At least, listen, think about what they're trying to say and why and what their perspective is. And I think if you had the old / there, will come in.
Oh yeah, it's / and toss.
Yeah, in other platforms it's the dot. But it's a really, really amazing, company. Obviously, we love tracking them. We'll have a few things to say about what they did say about Bitcoin, the other things a little bit later in the show. But yeah wonderful company. Mark, how are you doing today on a Monday?
And listen, I'm having a good stretch in life. Things are really good. And on top of everything, I got paid on my bet from Tim that Baylor Bears would win the NCAA basketball tournament. And I got 2 bags of gummy bears. And not only are they 2 bags, I'd never had these kind before, and they are absolutely delicious. So I feel like I got an extra treat in my life.
Well, you better thank my wife for doing
that.
Well,
apparently gummy bears. Yeah, apparently gummy bears is the equivalent of Warren Buffett happiness today.
Listen,
the little things make Mark happy.
It's the little things.
It don't take much, Give me my stocks up or at least neutral and some new gummy bears. I'm good to go.
According to Warren Buffett, those gummy bears are going to go up in cost quite a bit over the next year or so.
We had to load up on them now.
Yeah, you had to dive deep.
They're a long-term investment.
Are they going into the food storage?
They're going into the food stomach is what they're doing.
How long does it take you to go through a big bag of gummy bears like that? We talking a month, 2 months?
Yeah, maybe a month. I'm a slow eater. Like these things are massive bags, so it's not a one-setting treat.
I see. Anyway, well,
Challenge accepted.
I'm glad my wife remembered to pay my bet. She is the better half in my relationship. I'll tell you that. She does all those little things for me. So Mark, congratulations on the win again. Let's get down to markets here. And, as we start the analysis though, Matt, one thing I like to do is always promote something we're doing at Tackle Trading. If you can hit the website really quick, we put out another episode of our new podcast called The Huddle. And guys, if you've not yet been a part of the Huddle community, if you're not downloading it on iTunes, Spotify, one of those types of things, you can always do that. You can find it right on tackletrading.com at the top of the homepage right there as well. I will drop the link. And really the simple thing here, guys, it's going to save you time every day. 5-10 minutes, you go through the Huddle audio, you've got the write-up on the website, get the news of the day right from the coaches at Tackle Trading, and make your day a little bit more efficient. So Huddle Podcast, make sure that you are downloading and subscribing on your favorite podcast app. Matt, starting the week on a little bit of an up note here. I'm looking across the indexes, the S&P, the Dow, the Russell. They're all performing pretty okay. A little, green candle there up at the top. A little hesitation week last week. We talked about it. Busy news week left the market where we are up here near the high, near the all-time high. What's your read on prices right now?
Yeah, very slow, methodical market right now, but not a lot of technical risk in the market, I would say. Obviously there are some fundamental and economic concerns, but those are overhanging all the time. Technically, I don't think you're that concerned about the market. You do have it is a very slow, very methodical, slow-moving market at this point. A lot of news out there, obviously. People that were in the halftime report last week, tons and tons and tons of news just every single day. And the market a little up, a little down, but hesitation galore last week. But again, you're looking at the market, I think, a little bit from a defensive perspective. You're saying, okay, as long as we're riding that 90 MA, and I'm talking ultra short term here, as long as you're riding that 90 MA and you're playing defense above this old breakout channel, let's go down into that 30-minute chart to kind of look at it. You see the old breakout channel right there at about 4185-ish. Right? You break out. Oh, excuse me. It's down here at 4170. You see the old breakout channel down here at 4170, old resistance, old resistance, old resistance. And then last week, what we saw is test, 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 test. And that 4170 held multiple times last week. And so you're looking at this market as a defensive market technically right now. And as long as it holds levels from an intraday perspective, you're still looking at this from a bullish swing trading perspective, in my opinion. And once you achieve 4,200, once you achieve 4,210, you should see a little bit of running above 4,210. So expect chop in between this short-term range, and it is just short-term between 4170 and 4,210. Got some chop up and down, but again, as long as you see that 4170 there, as long as you see that hold on the intraday, you're still looking at this as a bullish swing trading environment.
Marky, what about you? How are you reading the price action here to start the week?
Really, when you look back at the last 11 trading sessions counting today, we're not a whole lot unchanged from where we were. It's just basically, we call it chalk, despite a plethora of news. But even in strong uptrends, that isn't necessarily uncommon. When we look back, because this has been a monster run since the election, right? Just an absolute monster run when you look at it as total. And in that monster run, you have seen the time periods in this monster run where you've taken 10, 15 trading sessions off, where it's basically traded sideways. Actually very common, very normal in a healthy uptrend for that to occur. And so, listen, technically, these little pauses that you get can be very, very healthy, and they can contribute. You can't have like the start of April. You can't have that parabolic move every week. It's not sustainable on a major commodity or on a major index. And so these little pauses, which are great for cash flow, and they still can provide some good directional opportunity for a stock picker's market, they're very normal in these strong trends, and they're very healthy. And I love the support levels, and there've been several develop in the last couple of weeks. And so I think technically it's very sound, like Matt said. And it's also very normal, even in strong market conditions.
Mm-hmm.
I mean, honestly, the open question that a lot of participants had last week was, why are we not up more? I mean, earnings has been extremely robust so far, and the news has been pretty bullish so far.
Mm-hmm.
But again, Mark's dead right. After a run like this in front of earnings, you're talking for the next foreseeable future about priced in. But a lot of it simply because the market is so far overextended in the short term. The markets need time to digest. Mark's right. They can't just do this. If they do just this, nobody can ever afford anything.
Yeah, and we will talk a little bit about that those inflationary pressures that were commented quite a bit over the weekend. Janet Yellen, the Fed, all those different people we're talking about. But you're right, markets are up here near the all-time highs, 4187, and they can't do that. It's not sustainable forever. Matt, we had a very busy week of earnings last week. Now we're kind of through the season. Now, what are going to be the potential catalyst as we move forward here into May?
Well, I mean, you have the seasonality concerns in the market. Sell in May and go away. We're going to be talking about that, and the legitimacy, I want to say, of the sell in May and go away type of philosophy that really has not had a great track record over the last 12 years, but we'll get into that. Kind of, Mark, you and I have talked about seasonality in the past. I put a little bit more, I give seasonality a little bit more credibility than you do, but I think both you and I are on the same page to the extent of seasonality is just an indicator. It's an indicator of certain things occurring, but you still got to see it occur before you start taking action on it. It's just another thing. It's like it puts you in the wheelhouse to go look at something. It doesn't mean it's going to transpire, but you certainly want to be aware of it. And so we're going to talk about sell in May and go away and that version of seasonality and how it historically has impacted the market from a numbers perspective. And so we're entering that zone of sell in May and go away, and we're entering that zone at a very elevated price. And Mark, you are correct. The price response and the appreciation in the marketplace ever since the election in November has been extremely robust, and so it's going to be interesting this year to see how the market digests the lull of the summer months, where we don't get a tremendous amount of activity in the market typically. So it is going to be a fascinating thing. But earnings last week. Right now, I feel we're in the back half of earnings because 60% of the companies have reported earnings. A lot of the major names out there have reported earnings, but that doesn't mean we're done. We have 137 companies reporting earnings this week. That is after a very robust last week. Now, the names this week are not near the big names that we had last week, right? The Apples, the Googles, the Amazons of the world, the Facebooks of the world. That was last week. This week, you're talking Berkshire, right? They came out, and we'll talk about them today. PayPal, Pfizer, T-Mobile, Square, Uber, GM, ConocoPhillips, Activision. Tomorrow morning, you have ConocoPhillips and Pfizer specifically. So different type of names this week and different market caps this week. Obviously, I don't expect the same degree of robust information coming to the market to digest on a daily basis the same way it did last week. But you still got a lot of earnings this week. And quite frankly, it's going to be an industrial week with 14 components in the S&P reporting. It's going to be a healthcare week with 19 components reporting. And it's going to be a technology week with 20 companies reporting in the S&P. It doesn't mean materials, communications, and staples don't have companies reporting. But again, the most reporting are discretionary, industrials, technology, and utilities. So we got a lot of reports to cover this week, but we're starting to get a sense of where we're at from an earnings perspective this quarter, and it has been a very good quarter. Once again, all of the numbers I typically do get from a macro perspective of earnings is from FactSet. FactSet does an absolutely wonderful job of compiling a tremendous amount of earnings information. And according to FactSet, 86% of companies are beating the EPS expectation. That's above the 5-year average of 74%. It's also in the first slot when it comes to percentage of beats at 86%. That's the highest that FactSet has ranked ever since they started doing it in 2008. Now, of that, 22.8% are above the estimate right now. That number is the second highest of all time, and the 5-year average is 6.9%. Now, again, these numbers are very, very robust, but in a bubble, think about it, kind of where we were last year to where we are this year. Last year, we were going through an unprecedented situation where we were shutting down the economy. This year, everything's opening back up. So there is some context around these numbers. But even with that context in mind, man, you got to be very, very impressed with the bounce back in earnings. It's been very, very impressive. On the revenue front, 78% of companies are beating revenue right now. That's against the 5-year average of 6.4%. That 5-year average on the beat is about 1% on revenue. They're coming in at about 3.7% right now, and that is, I believe, the second highest of all time. So, from an EPS perspective or a revenue perspective, you got to be extremely, extremely impressed by the raw numbers. But when you're talking about a lot of these raw numbers, you got to look at where they're occurring. And when you look at the types of sectors that have been really, really robust from an earnings perspective, I would give the discretionary sector the first slot for how impressive these numbers have been coming out of the discretionary space.
Okay.
Now, again, discretionary last year, what was everybody doing last year?
Well, at this time, we're all staying at home during the middle of a
We
pandemic.
weren't going to the mall.
Yeah, that's right. We were not out doing our shopping as normal. Correct.
Okay, so there's context there, but you got to be impressed by what is happening in the discretionary space from a numbers perspective. You're talking about an EPS beat that is averaging 181%, guys. I mean, these numbers just don't happen. And that's from an EPS perspective. Even from a revenue perspective, the discretionary space has been, it has been above line. It's been above line, but it hasn't been as impressive as some of the other spaces like communication services, information technology, and finance. But that discretionary space EPS number is extremely, extremely impressive. Again, the context does matter here, coming from what we were last year to where we are this year. But I've been extremely impressed with the reports coming out of discretionary. I've been extremely impressed with the reports coming out of finance. I've been extremely impressed with the reports coming out of comms and coming out of technology. So it's been a very, very good start to earnings from a justification of what has been transpiring. But we still have that open question of what is that next catalyst, because we're now at the back half of earnings. We're through the Apples, we're through the Googles, we're through the Microsofts, we're through the Netflix, we're through all of that. Where is that next catalyst? It has not been earnings so far. It's wait and see approach from a technical perspective, because as of this point, earnings has not been that catalyst, given the fact that earnings has been seen as justifying what has transpired in the past instead of looking at a forward projection analysis.
It's one of those situations where, actually the phrase priced in does apply to these market conditions. Over the last 3 weeks, as we've been getting earnings reports, we'd had such a big run up into that, they almost had to just smash these numbers to keep prices up at these levels, right, Matt?
Well, listen, I get a little triggered with the phrase priced in.
I know.
I do. I do not like that word, because I feel like it is misused more often than not, quite frankly. They say it's priced in for anything that goes up, and it's not. And I think priced in is a version of extremely lazy analysis, but I also agree with it right now.
Yeah, I think this
Yeah,
time
I mean, it's
it makes
almost
sense.
like people knew that there was going to be a really good earnings season.
Yeah.
I mean, expectations were high. And what's been impressive about this earnings season is that, I mean, you're looking at a historic earnings season. And, as I dive in, and there's a lot of reports, you don't get to them all, but I've been diving into them. I dove into a lot this weekend. I'm impressed at the cost cutting. Companies became lean and mean in the last year. And I've talked a little bit about this with oil, but companies did as a whole. They became lean and mean, cutting expenses, trimming fat, and then personal income's up because so much government free money. It's been a great earnings season, and and I think people anticipated that, and that run up we had at the start of April, really massive percentage run up. I think people were front running a little bit in this case.
I mean, Mark, you said it's almost like we knew. Well, before we saw any bank report, before we saw Netflix report, what did I say about the expectations of this earnings? It was expected to be the first, second, or third best earnings of all time.
Even before the banks 3 weeks ago, you're
Even
like, we
before the
expect this
banks.
quarter to be a record quarter. Yeah.
And we're seeing it. We're seeing it. So the expectations were there, and they were there. They were well known by the market participants, and so that's why I feel like the priced in philosophy does work in this version of analysis, given the fact that these expectations were very hot coming into it. And they're even getting hotter, guys. I mean, when you look at the EPS estimates coming down the road, they're at the highest point they've been since 2002. And so we've seen this, and that's why it's important to follow the market, because over the last 3 quarters, we've seen these earnings numbers get better and better and better and better, and they have played a massive role in how we see this market in the recovery over the course of the last 9 months. And so we're on that trajectory, and there's nothing in these earnings numbers that to me show concern other than the one supply side concern in. That's the one concern
Mhm.
of headwind that really could impact. Obviously, we have some COVID data that is concerning coming from around the world, particularly in India. But that the headwind is the concern, and that is the supply side in chips.
And Maddie, I want you to flip to that Logitech here for today, if you can, just real quick. While you do that, I'm going to bring Mark in for the next bit of analysis here. Go ahead. Yeah. Marky, obviously earnings season, we're mostly done, but we still have some big names set to report as we're moving forward. Like Matt's been talking about, the data's been impressive around certain sectors and whatnot. This week, we do see reports out of PayPal, Pfizer, T-Mobile, Square, some industrial names like you guys are talking about, Uber, General Motors, but even the gaming company Activision does report. Who are you looking forward to this week, Mark?
I mean, obviously, anything you have individual trades on are the ones that are most interested. I mean, but really, I mean, Pfizer is one of my pet companies. Activision is a gamer I'm always interested in. But you got such a wide diversity. I was looking at the earnings calendar for the coming week, and it is just a little bit here and a little bit there in lots of different sectors. I'm just fascinated for the accumulation, and I think it's really important because once this earnings season is done, and let's say this week continues like the last couple weeks have, and add to this collective total of companies are making money, and they're making money at a bigger rate. Like, it's one of those things that when you look at things from a fundamental perspective, yes, our valuations high, yes they are. Could over the course of a summer there be lots of catalysts that spook the market in the short term? But at the end of the day, there's so much news that drives the market, and so much nonsense that can get the market going one direction or another. If companies really have not only exceeded expectations, but most importantly, collectively as a whole, trimmed those costs and became leaner and meaner. If there is a big dip over the summer, it comes back to a positive earnings, which is at the core of what we do here in the stock market, right? We have so much news, trade wars and Fed and this and that can move the price on any given day. At the end of the day, it's all about companies making money. And if they have, as a collective whole, done a really good job at cutting those costs, and that to me is going to be a fundamental backstop, not just for me, but I think for the market as a whole. If there's a big dip, or if there is some bearish story that emerges over the summer months.
Mhm. As I look across all four of the different indexes, I don't see much notable difference between just basic price action here. The last couple of weeks, we've been kind of just consolidating near the highs on the Dow, S&P, and the NASDAQ. Matt, anything grab your attention between the RUT, the NASDAQ, different indexes?
No, I do think the Dow, relative strength here today, does have a few components reporting this week as well, but I do think the Dow has a cleaner potential breakout than, say, the S&P does. The Russell's looking at a little bit of a flag-based pattern with the horizontal breakout at 2300. We've talked about that right shoulder break at 2300, and that's lining up fairly decently here as the Russell 2000. Inside candle sitting at support, old resistance, new support, cluster moving averages right there. So you're looking at the Russell 2000 as a potential to break out and run here. Let's see that first before 2300 has played a role many times. Got to see this. I don't think you could be trading this Russell 2000, bull flag when you have such a strong resistance channel at 2300. You wait for that close and you wait for that run on the Russell 2000, but it's lined up for a potential break of 2300 with the Dow breaking out of its high base consolidation it's had for the last couple of weeks. And then when you're looking at it technically from the NASDAQ, you're seeing a little bit of short-term consolidation. And there is a difference, in my opinion, from a consolidation and a high base. You might look at the Dow Jones, right? The Dow Jones, be like, yeah, short consolidation. You're looking at the NASDAQ and you're saying, okay, same thing, short consolidation. The difference to me is pivot confirmation. You have more pivots here in the short term, which would put this a little bit in consolidation versus a high base. In a high base, you're lined up ready for that breakout, and you'd be doing that on the NASDAQ at 14,000 as well. You just got a little bit more up and down nature than in terms of pivots in the Nasdaq than you do in the broader markets. And then when you look at technology here from a sector perspective, not discretionary. When you look at technology here from a sector perspective, it was the one area of the market that we did downgrade last week in our Tackle newsletter, where we put our rankings in all the sectors every single week. And so we did downgrade it from 15 into the 20, given the fact that we did, again, you have pivot confirmation here. And again, it's short term, it's consolidated, but when you have pivot confirmation, that's just a little bit different than a high base, when it's just very tight consolidation. And so with the close underneath 140 there, you got a little concerned in technology, given the fact that the NASDAQ's doing a little bit more consolidation neutrality than a high base when you're looking at just hesitation in front of a bull breakout there. Technology breaking down a little bit, showing a little bit of concern.
Yeah, and I'll tell you, I mean, it was the only sector that we even gave a slight downgrade. It's not like we're bearish on tech. We're just
Well,
respecting that
and
support violation, right?
and honestly, we're sitting here in the scatter report meeting, and we start doing our rankings about an hour before the market actually closes.
Yep.
And so we had all of our rankings solidified, and then we confirmed them once the market does close, but we didn't put a ranking officially on technology, because once we started ranking it, it was sitting right here at 140. And all of us coaches were looking at that 140 level, and we're saying, okay, if 140 holds, you're still within this consolidation range, and you're not going to downgrade in that. Right? You might not be looking to pick up trades there, but you're not going to downgrade an entire space when it's just consolidating after a very good, healthy run up in the short term. But once you close underneath that 140, you close underneath that pivot confirmation at 140, you got to react to that. And so even though it only closed, like literally it was 139.70 officially, that's a close underneath support, and that's a downgrade for us. So the only concerning area of the market that we felt that needed to be downgraded was the technology space, and a lot of that, basically we just discussed.
Yeah, absolutely. And the one sector, while we're on sectors, there's not a lot of movement in our rankings through the week, but the one sector we did get an upgrade on was communication. And a lot of that was on the backs of Google and Facebook, such incredible reports last week. We highlighted those earnings reports when we were in the halftime show when they happened, and broke out, had to respect the breakout. We moved that one up a little bit as well.
Yeah, you got to respect the breakout here. And, starting off the week on a negative note coming down, but you are testing that old breakout channel here about 77 to 77 and a half, right where that 9 EMA is as well. And a lot of times you're seeing this as of right now as one of those Cody specials, right? Where you break out, snap back, come back and test that old breakout channel, wait for these moving averages to catch up. So starting the week off on a negative note, but you got to like the potential breakout there out of the consolidation, a little bit of a cup handle feel to this technical pattern. You break out of that, typically that looks pretty good on the weekly chart, and you see that consolidation here, breakout. Starting off the week, you got to call that confirmation last week, starting off the week on a negative note, but let's see where that ends by the end of the week. And Tim, you asked Mark, what's your most anticipatory
Earnings report.
earnings report. Mine would be in this space, Activision. Activision, one of probably the most important gaming component in this space, in my opinion. One of the more healthy from a fundamental perspective is Activision. It's been a Tackle 25 darling for years now in Activision, and you can kind of see that long-term chart here over the last few years. Activision has been very healthy, very robust. But when you're looking at this on the daily chart, you're a little concerned here in Activision. You've tried to break out, got snapped right back down, tried to break out again, snapped right back down. And now you're really kind of kissing into those very important support ranges between 80, really kind of 88 and a half, all the way up to 90. A violation of that trend. Yeah, you got the 200-day moving average there, but you better be hoping that's stronger than this technical pattern is. And so you're going to have a battle there. If you break down, that could get concerning. So it's more not because I think there's going to be a trade on Activision, but Activision's a good company, fundamentally strong company, but a violation post earnings might be a little concerning.
Mhm. But I do like it when a company I'm tracking, and this is a part of the fundamentally sound, list of cover call candidates we talk about, Matt, one of your favorite companies, one of our favorite companies that tackle trading for years and years and years. But I like it when a company who's set to report earnings that I believe in is near its support zones, right? Because then it doesn't have to just smash everything completely out of the ballpark to
It doesn't.
justify, right?
It doesn't. But the flip side is there
If it
too. What if
breaks.
it violates?
Yeah,
Right,
yeah.
right. I do think you got an edge on earnings to for the buyers to come in because you're at the low price. I certainly think you do have an edge there, especially on a company like Activision. But that edge is like 51 versus 49%. Like
Yeah.
it's still very, very close. And you're right, Tim. Typically, we do see the buyers come in on a good company towards the lows. But man, we all know what that looks like with a violation on support, and it could get nasty. And so, Activision for me is 1A looking at the market this week. You also got some interesting reports. You got the Square, you got the GM, you got the Ubers. But the energy space, we started getting, Chevron and Exxon Mobil last week, and both reports were decent reports, no doubt about that. But we hadn't seen outside of Chevron bringing back the dividend a little bit. It hadn't done the same thing the European counterparts did out of BP and some of those other European who was it, Dutch Shell, right?
Mm-hmm.
And so it's going to be interesting with Conoco tomorrow. So I would say Conoco in the earnings in the energy space, but for me it's Activision.
Mm-hmm. It's going to be a fun one to break them down as we get them one day at a time through the week. And like you said, still over 100 companies in the S&P that do report this week.
And I wasn't here on Friday when Exxon. I loved Exxon's. I dove into every line of that. I loved their earnings report. I thought it was amazing.
Yeah,
it was a great report, Mark.
Yeah.
As a believer in the space and having a thesis, I don't think I was suffering from confirmation bias just reading, because it's a real thing, right? You always have to be careful of. I thought it was
headlines. I said this on Friday, Mark. The headline was all about Chevron because of the dividend. The headline was all about, or last week was out of BP and from the week before, but Dutch Shell increasing dividend, putting more money back into the investors' hands. I thought ExxonMobil, who did not do that, had a better report than all three of those did. I thought Exxon's raw numbers were legit good. And I said, even with Chevron giving more money back to the investors, this Exxon report is slightly better than Chevron's.
Yeah, and I've been like, listen, I mostly do these things from a cash flow perspective, but the whole reflation trade, I think that's where I'm at moving forward. I think even if the markets stall, I think a lot of the cyclical areas and the things that benefit from a strong economy could have a really good summer.
Well, and again, we've been talking about earnings from a broad market perspective about this priced in. Well, what are we starting to see in earnings though, in energy specifically? Last week was the week we started seeing energy. There's no priced in there, guys.
Mm-hmm.
No.
Okay, that's not priced in.
Mm-hmm.
That's after earnings. You're starting to see a breakout. You could see some a little bit of movement here in energy. And again, we do have some energy components reporting this week. We have, I believe, 10 energy components in the S&P, but last week was the big ones. Conoco a little bit tomorrow, but again, you gotta like the response. Even if some of this was front run, you gotta like the response last week that energy had.
Well, I like the response today, quite frankly, because Friday, Exxon and Chevron, even on those strong reports you guys talk about, they were off 1 or 2%. Right now, we're coming back and we're pushing towards a potential little breakout in the short term.
Yeah, the whole market was sour on Friday. I was very curious about today's response, because I can have an opinion all I want, right? If the market doesn't agree with my opinion, then short term I gotta sit through some crap. But I was really curious about the response. I really like today's response a lot.
Mm-hmm.
Well, and Mark, let me give you a couple numbers, okay?
I love numbers.
So far in the energy space, 92% of the companies have been beating the estimate. 92%. That's above the market at 86%. Okay. Now, next, earnings growth. Now, what's the energy components been doing in the last year, guys?
Well, I mean, obviously they were beaten down for so long. Then
Okay,
they made the
just go
biggest
look at it. Just go
recovery.
look at ExxonMobil. Just go
Mhm.
look at the chart.
Mhm.
Loss, loss, loss. And yet we showed a positive. Blended earnings coming out of energy space up in EPS 6.5%. So it's not just Exxon you're seeing this in. It's literally the space you're seeing this in as well. And then when you're talking about beats on revenue, you're talking right about energy about 64%, which is about the 5-year average against the S&P, but it's actually better than the 5-year average in energy. And so the energy numbers, like when you're comparing energy in EPS beats against, say, information technology, that doesn't happen very often. Energy is a slow, methodical beast. So you're seeing a little bit of life here in energy, and it's understandably so after we saw what, again, the European counterparts giving more money back to the investors and the American counterparts out of Chevron and Exxon coming out with very, very robust numbers. And that revenue number out of Exxon was extremely impressive.
Yeah,
But again, that's what happens when crude oil is above $50 on average.
I mean, it's one of the things, and it's one of the things about that I love about commodity companies as a whole. Like, I don't know the specifics of earnings, but if I know what the price of the underlying commodity has been for an extended period of time, I have a pretty good guess, right? I mean, there's lots of surprises that can happen in this and that.
Well,
but if oil stays healthy, I'm sorry, I just am going to be stubborn. I just believe that we have genuine inflation, and I think there's a leg up in oil still. And even if there's not, I think energy companies are going to do pretty good.
This is why seeing that average cost of oil go up over time is important for the energy space in general, right? And the entire argument for the energy space was the stabilization argument on oil. And what did we say? As long as these ranges hold, that average cost of oil is going to be going up over time. And now we're averaging above 50. This is the first time in the pandemic we've averaged above 50. And so again, you're seeing those fundamental arguments play out over time. I love fundamental analysis.
I love fundamental.
I love
fundamental analysis, and I like making my pinpoint decisions on technical analysis.
Yep.
Mhm.
And I think that combination,
Well, it's a beautiful thing when fundamentals and technicals start to line up, right? I mean,
that's
a
just
beautiful
trading is easy when that happens.
Well, never easy. I don't ever
Well,
think it's.
how about we try to make it easy and put stocks on a watch list that are fundamentally good companies and not
There you
trash?
go.
Make trading easy, guys.
Make it as easy
You
as
don't
you
have
can.
to put the garbage on your watch list. There's a lot of garbage out there.
Oh, it reminds me, and I've
Now,
said this story a million times. That one guy that walked up to you in that class once, and he says, Matt, you're just looking at the easy charts. And you're like, yeah, that's.
I remember that. No, you know me. I don't just say yeah. I said this. I was in a room with about 75 people, and I was teaching a technical trade on a high base breakout or something like that.
Mm-hmm.
And some dude raised his hand, and he's been poking the bear all day long. And he raised his hand. He's like, Matt, you're just showing us the easy ones. And I said, I'll make you a deal. You go trade the shit. I'll trade the easy ones. We'll see who gets there.
We'll see.
That's what I said.
More sounds like the way you would have said it. That's
yeah,
right.
that's that. I just want to be clear on my quotes. That's what I said.
I love the story, though.
The thing about it is and traders be like, yeah, the thing that where traders fall into that problem is sometimes it requires patience and discipline, because your chart, especially if you're only looking at, like, I got a couple companies, it can take a long time for a beautiful pattern to emerge.
Well,
traders get anxious, right? I got to do something today. Man, patience, man. The patient trader tends to do very well.
This leg up was a beautiful leg up where a tremendous amount of money was made, correct?
Mm-hmm.
How long and how many times did I talk about multiple time frame analysis lining up in this, guys?
Oh, you detailed it day by day by day.
Day by day by day by day.
It took 6 weeks before you saw those line up to see that beautiful trend that made a ton of money for a lot of people. Trading is not day by day. It takes patience. It does. It takes patience. And right now, when we're in a low in the market, we're not opening up the Kraken and opening up those risk graphs. We're being patient.
Mhm.
There's
cash
trades
flow
to be
what you
had.
have. Yeah,
Right? Yeah.
it's just like, the trader I feel the worst for is the trader that says, I got to make money this week. Oh man, I feel bad. I mean, you're putting yourself at a liability against the patient trader.
No, you'll lose.
Yeah. When you put too much pressure
Yeah,
on
you'll
yourself
lose.
to perform in the short term beyond expectations, you're heading for a life lesson.
When you need to make money today, you're an emotional trader and you'll lose.
That's not markets. That's not how you.
Yeah, that's not how markets work.
Yep.
But we were talking about the trash, and I had a perfect transition from somebody's trash is another person's treasure. I was going to transition into Bitcoin with Charlie Munger, but I couldn't get there, Tim.
Well, you just did.
No,
you
I
just
couldn't.
did right
No.
there. You got there right
No,
there.
I couldn't get there. I had it lined up. Tim said we were talking about trash, right, in the market on watch this. I'm like, well, somebody's trash, other people's treasure. One of somebody's trash, Charlie Munger, is Bitcoin. What do you guys think? I had a perfect, but no, it didn't work out.
Well,
but I'll still do it.
We broke the third wall. Now we're doing it anyway.
I don't care. Tackle trading knows I speak my mind. Like they know that.
We're here. Transition done.
Now we'll transition
done. No, I want to talk more about the quality of the lack of quality in the transition there. But Bitcoin here, I do want to give some news on Bitcoin.
I would love to hear the
do you
quote
want
again
to give
because
the news?
let's just talk about it first off. Number one, before we get to Bitcoin, Ethereum record high again. Just make another note of it.
Technically darling right
Unbelievable strength out of Ethereum relative to many. Look at that weekend candlestick.
At that. So sexy on Ethereum.
Which is notable. The conversation within crypto circles right now, are they decoupling? They're going to stay correlated in many regards, guys. The history of Bitcoin and Ethereum, I've seen this at different times. Bitcoin can lead at times, Ethereum can lead at times. Let's not overthink that part right now. But yes, they are performing in different fashions. And there was some commentary. Berkshire Hathaway reported their earnings over the weekend. They also had their annual event. They call that the Woodstock for entrepreneurs or whatever it is. This year they did it in LA. And I think it's interesting, Matt, a lot of the news reporters were watching what private airplanes came in from different companies.
We're doing Davos now.
we're doing
Davos.
What deals is Berkshire going to strike next? But some interesting commentary out of Charlie Munger.
They don't do that on the annual.
No, I know. All the speculation out of this guy. I'll give you the quote from Charlie Munger when asked about
Can
Bitcoin.
I do my made-up quote?
Sure. Sure. Like, do you want the real quote or the made-up quote?
What I heard when Charlie Munger speak was I thought I heard Bitcoin is from the seventh circle of hell, sent to destroy all of humanity. You should run away or your children will become infested with demons.
He's not that far off.
I think that was the intent.
I think.
I mean, here's what he actually said. Of course, I hate the Bitcoin success. And adding that it's disgusting and contrary to the interest in civilization.
He wasn't far off. But what Charlie Munger said was nothing new to the world of Bitcoin.
Nope.
He has said it a lot.
I could hear Charlie Munger speak on Bitcoin every day of my life.
I could too.
And it would add to my happiness. And this is, this is as a 7-month Bitcoin bull,
Yeah.
So listen,
I'll just say
I don't know if Charlie Munger is going to be right or wrong historically.
Yeah.
But I think we can all appreciate what he is saying about the last 6 months in this space.
Yeah.
This is not normal, guys. It's just not. But also, we've really never seen a new currency like this be adopted by corporations and consumers worldwide either. And so, okay. I don't necessarily agree with Charlie Munger on his statement on Bitcoin. I do appreciate the conversation and what him and Buffett bring to this conversation. Sometimes you need somebody like a Buffett and Charlie Munger to come in and be like, hey guys, what you're doing is crazy. What you're doing doesn't work long term. and I totally respect that. I also, whenever Buffett or Munger speak, it's not like we always agree with what Buffett has to say. Many times in the past, we've disagreed with Buffett or with Munger. Just as traders, we all have our different minds. We all have our different perspective.
Mhm.
I just think when people like Charlie Munger and Warren Buffett speak, we should listen.
I agree.
That's it.
Yeah.
Whether you end up agreeing or disagreeing, I think listening to the conversation and again, this is just the old lawyer mindset, right? You want to understand your opponent's argument even more than your own argument. And a lot of times we don't listen to those things because we get so stuck in our own opinion that we just automatically fight against people who disagree with us. But I think when people like Munger and when people like Buffett speak, we should listen. Whether we agree or disagree is a different conversation, but I always listen to them.
Mhm. I agree 100%. I think that's got to be the mindset you have. You can come to a different conclusion, but if you don't listen to one of the greatest investors of all time, 97 years old with the life
No, the
experience,
greatest. Oh, Munger's one of the,
Munger.
but
Yeah.
Buffett's the greatest.
Yeah. But you have to have an open mind when these type of men and women speak.
Well, and Buffett's missed out on some really good opportunities. Buffett missed out on tech historically. He missed out on gold being one of the best financial instruments of the 2000s. So he's had some very big historical misses, and crypto, as of right now, 10 years into this, has been one of those big historical misses. And so I don't want to say it's with a grain of salt or maybe a little bit of a grain of envy, but at the same time, I think he's warning that the speculation in the market in general is a little bit out of control. And can't we all agree with that to a certain extent?
Yes.
That the wide range speculation in the market in the past 7, 8, 9 months has been a little bit out of control against what historically it has been?
Is crazy right now. Yes.
No, and it's like the people you learn to respect in life, and like Buffett. I mean, I'm a proud Buffett disciple. He influences to this day what I do. But Michael Burry too. I respect people who tend to be right. Right? When people tend to be right a lot, and Burry's basically railed against crypto for different reasons, but basically saying, listen, there is so much leverage that has pushed this run up. If you don't understand the amount of leverage that has pushed this up, then you shouldn't be long. You shouldn't be long.
Sometimes it is difficult to see what is really in the market. And right now it's one of the hardest things in the market is to understand what is actually fundamentally transitioning to something good versus what is just being pulled up with the amount of liquidity we have provided to the marketplace over the course of the last year. A lot of these robust trends that we've been seeing transpiring over the last year, they're not going to sustain. Not only are they not going to sustain, they're going to get slaughtered. But there are these movements. Like, I don't expect the industrial movement just to go down. I don't expect the financial movement to just go down. I'm talking about like the GameStops of the world, the AMCs of the world, the Hertz of the world, just three off the top of my head, but we have countless other stories in the past year of hyperbolic trends that did not last. Is Bitcoin one of them? Charlie Munger, Warren Buffett would agree with that. I don't necessarily agree with that. Once again, we're talking about Bitcoin here that has been widely adopted by corporate America, that has international usage, that consumers are starting to adopt in terms of the social conscious. And so I don't necessarily agree with what they have to say, but once again, I think we can all agree that any instrument in 6 months going up 500%, including the number one cryptocurrency in the world, is a little bit over speculation.
Correct. Yes. I mean, if you can't at least recognize what you're dealing with in the marketplace, you're going to be walking forward uninformed. It's definitely
and just
speculation,
my last thought
massive
on
leverage.
this subject is, I mean, the opinions, because we all love the institutional adoption theme of Bitcoin. I mean, it's what's got me on board. But the contrary opinions, They give you insight. It gives you perspective, and it helps you make balanced decisions so you don't get caught up in the euphoria. You can still be long, you can still be making money, but you don't get caught up in the euphoria and you get some perspective.
Mhm.
And now to their raw numbers.
Yeah, let's get the Berkshire numbers. What?
I,
Because
I got,
there were
I
some
got
other comments too, but give
Yeah,
me
I,
the
I
numbers.
didn't get the net revenue number, but the EPS number is $3.05 versus the 258. A very good, healthy beat out of Berg. And I do believe my numbers are a little off, but it was a healthy beat. Buffett also talked a little bit about Robinhood though as well, and talked about I think he's hinting towards the free commissions and how that's adding to the rampant speculation. But he called Robinhood a leech. That was interesting comment out of Buffett. I do agree with Buffett on that one. I do think Robinhood is a little bit of a leech. He also, Mark, he talked about SPACs, Buffett did. And he said that they're not, think about Berkshire as a massive hedge fund that accumulates other companies, right? That's what Berkshire does. They accumulate other companies. Well, what do SPACs do? They accumulate other companies, bring them public, very similar to what Berkshire does. But he does not feel SPACs are a competitor to Buffett. That was number one. And he talked about them being very attractive, but he doesn't expect the trend to last. Mark, do you have any thoughts on SPACs?
Yeah, no, listen, when things are easy, the problem that SPACs had from perception thing a lot in 2020 is it didn't matter what the SPAC was. You invested, it made money. Like that, whenever you see that trend in a market that everything works, well, that's not sustainable. Just think of SPACs like IPOs. And so I think what Buffett was alluding to is like, listen, the trend of like, and then you started seeing when you start seeing celebrities come out with SPACs nonstop. Listen, there's a point of euphoria. I mean, I look at SPACs and we'll continue to look at SPACs because it's the euphoria of they're going to be 500 SPACs a year. Is that going to die? Of course that's going to die. But you just look at them like an IPO. I don't think they're going to die the way of the dinosaur. And I'm going to look at them as IPOs. I see certain IPOs like Roblox, and I'm like, oh, I'm really excited about that one. I'm going to treat SPACs the same way. Sometimes there's going to be SPACs like the Topps baseball card. I got really excited at that. There was too much nostalgia of my youth to not look into the company and get excited about it. But like, look at it like IPOs. Most IPOs you're like, eh. But every once in a while there's a Palantir where you're like, oh. And if that happens to come out through a SPAC, you shouldn't ignore it just because of the label.
Mm-hmm.
But the days of SPACs just everything's going to work and it no matter what, yeah, that had its run.
And that's kind of what I think Buffett was talking about, that there is some attractive values, but the euphoria that SPACs had where everything just went up, I think he's saying those days are a little bit numbered.
Yeah, yeah. And I think all three of those comments were
Last,
interesting, by the way. Go
and
ahead.
the last comment that Buffett made in his annual retreat was on inflation. And I just want to remind everybody what our good friends, our warm and welcome friends who support Consumer America so much at the central bank. Jay Powell has been saying the word transitory. How many times has he said that word, Mark?
I kid you not, Fed speakers have used that inflation is transitory, and I probably look at 800 news articles a day. I have probably seen some phrase like that in the triple digits already, like maybe probably 200 or 300 at this point.
Okay, and guys, when the Fed coordinates speeches like this, they're lying, and they're lying on inflation as well. And Buffett agrees with us. That's the news headline out of Tackle Trading. Buffett agrees with Tackle Trading that inflation is not transitory, that it is going to have a lasting impact on consumer America, and that the central bank is not our friends, and they do not support America, and they are not American in general. That is our message to the central bank. But Buffett says inflation, it's not transitory. It is up, 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 and not 3 ups, guys. He went to the 4 ups and up, and this is coming from the biggest home builder in the U.S. out of Berkshire.
Mm-hmm.
So I don't know who you're gonna believe on inflation, the central bank or Warren Buffett.
I mean, it's one of the reasons, and we'll talk about silver in a second, that I've been a big fan of silver, even though silver's done nothing. It's been good cash flow for 8 months. It's why I'm still a believer in oil. I mean, I just look at the stats of historic investments that do well in inflationary environments. And you know what is at the top of all of those lists? Yes, stocks, maybe not tech. Tech kind of is, but stocks do okay. And commodities do great. And commodity stocks do great. And I've just been stubborn on that and will continue to be stubborn because I know what I'm paying for stuff and I see the stats and I see everything. Listen, Jake Powell can say whatever he wants. Inflation is a real concern and will continue to be a concern.
If inflation is transitory and all the companies start lessening the amount of goods in their products, is it still transitory that you're getting less goods?
No.
I just have a question for Jay Powell. If Costco reduces their size by 50% but charges the same cost, is that inflation or deflation, Jay Powell?
It's shrinkflation.
I would like to know that, pal. Oh,
Yeah.
goodness.
Well, one of the last things from this report, and then we'll move into.
It's not inflation, Tim. If you're paying the same cost but getting less goods.
If you're paying the same cost, getting less goods, there's no inflation.
It's
there?
not inflation.
I'm going to have to head scratch that one because that feels like I'm not getting the same purchasing power.
Listen, we'll have to re-educate you on math.
I need one of those re-educations. Like you got to go back to economics.
It's the re-education is post 2008. Right. We have to go back to and we can't go to Chicago. We have to go to Germany for this one. Mm-hmm. We have to go to the German School of Austerity Economics. That's what we have to go to.
I see. The re-education of the American people by
2 + 2 does not equal 4 when it comes to inflation.
By the way, over the weekend, not just Jay Powell, but also Janet Yellen was saying the same thing: no inflation, no inflation.
You know, you always know the Fed and their cronies are up to whatever when everybody is saying the same thing, and they're
coordinated
trying
to get a speeches are a tell.
Usually,
it is a hey, this is really a problem, and we're going to try to convince you it's not. Seriously, in the inflation topic, I mean. It is what really got me motivated a year ago. And I've always loved trading and I've always that, but I'm like, I need to get my financial future set for now and forever because inflation's a real thing. It's a real thing. And when all the people when I say people, these so-called smart intellectuals, when all they really have is let's throw huge swabs of money at the problem, how do you not expect inflation to be an issue? I mean, it's not an advanced thesis, right?
Mm-hmm. Well, in one way that.
Just wait, Mark. Just wait for a year from now when they start telling you that the biggest concern is deflation. Just wait.
Well, they try to do that now.
No, I know, but it's not working now because we see the cost going up at the gas station. We see the cost going up at the grocery store. We see costs going up radically. Nobody's going to make a deflationary argument when costs literally are going up month over month, over month, over month, over month. The deflationary argument is when they need more money.
They'll flip it when they need to, right?
They don't need more money right now. They have the liquidity they need. When they need more money, they'll turn the argument to deflation.
We got to worry about deflationary expectations.
I mean, if asset prices go down, the house of cards gets beat up. I mean, I'm just so done with the Fed.
And the new way we're measuring inflation is we're taking a 20-year average of inflationary pressure.
Don't get started. Because transition. Ignore what you're paying today. Just average in what you've been paying for 20 years. I mean,
you better get control of this or it's getting out of control.
Next.
Here's transition. Don't even finish thought. Transition. Transition.
We're moving on, Mark. We're moving on. We don't want to have a
Needless to say, it's all right. Fine.
Listen, if you want me to get on a soapbox, I will, but I have some things to say about the Fed, and I'm not happy. So transition.
Well, let's talk about gold here next. It's having a wonderful day to start the week on a Monday. Mark is going to be highlighting silver here in a few minutes during the Commodity Corner, one of the segments we're going to be doing on Mondays as he runs our commodity report over at Tackle Trading. Silver's caught his attention today. It's got to be in correlation with the move here in gold. Gold's looking beautiful here on a Monday, threatening a breakout up here at 1,800. Matt, what are you seeing in the chart?
You know what? You're seeing that, well, honestly, you're seeing a potential breakout is what you're seeing. And I don't love the run up on the breakout. That would be a little overextended for gold in the short term. Oh, but give you a couple days of consolidation, line that breakout up above 1800. I think it's going to be pretty sexy above 1800, and probably most likely should be hitting that 200-day moving average, but we will see. Looking at it in the hourly chart, you see that, 1800 zone, 1799, 1800 right there. You see the real drive up coming into the cash open here today, or excuse me, on the futures market. Cash open kind of hesitated. Futures market really drove it up on the overnight, kissing up against 1800. Now when you're looking at it from a 30-minute chart perspective, you're seeing a little bit of bullish retracement, showing a little bit of horizontal movement at 1790. Ooh, could get sexy here, but I would love a couple days of consolidation into that breakout of 1800. But whether you get it or not, the breakout of 1800 is legitimate and should see price appreciation up into that 1850 level.
Strong day here as we are pushing towards that 1800 level. And obviously, over the last couple of weeks, we're just talking and highlighting, okay, this is healthy as long as we're holding. Doji, no big deal. We're holding the pivot. We're holding the range. Held 1750 for one day, Matt. Really, really beautiful candle.
Okay, so we fell off the ladder. We hit the ground. Now we're stepping up the ladder. It's all it is. You're walking up the stairs at this point.
Last quick peek at the dollar here. And, we're going to have some economic data throughout the week, a few Fed speeches as well. ISM numbers came in a little bit disappointing today, still beyond the 50 level, signaling expansion, but off of the expectation. Matt, was read on the dollar.
It's garbage.
Still is garbage. Yeah, and that one day reprieve on Friday did not get that pattern out of the woods here yet. And obviously we're just down here below moving averages. So gonna be one to watch.
Matt, again, the one day on Friday was Europe going into a double dip recession, and it lasted one day. I don't trust that one day movement. I mean, no, I got a bearish ranking on the dollar personally. Short term, you're looking at a little bit overextend to the downside. Expect some consolidation, a little bit of random price action.
Matt, the dollar being garbage is transitory.
Well, if transitory means 108 years of data, then yes, it means transitory.
It's just transitory. It's just transitory.
Just transitory. Huh? Are you trying to trigger Matt here right now, Mark?
He
is this
he
some kind of thing
you
want like a little snack break before the silver
trolling.
segment?
No, I've given up. You guys haven't noticed.
completely
I've given
trolling.
up on being able to get food in the halftime report weeks ago.
I know, because we've got all your tells now.
You got all my. I know. I gotta wait for a new cycle to start.
Yeah, we figured your tricks out, buddy. We figured your tricks out. Let's move into stock talk here. Got a few corporate items. Then we're going to have that commodity corner segment here in just a minute. Let's just start. We'll go down my list here. Tesla first. Tesla, they announced big plans to open up a factory in Germany and Texas, and they've already got the production in Shanghai. Well, the one in Germany is going to have to be delayed for a little bit. They're delaying it to January from July, citing regulatory concerns in Germany, some red tape they couldn't get through. Who knows what the actual underlying reason is, but that production won't be online. Matt, is there any interest in this chart though? I'm looking at the pullback. 700 was a key level. We are not back above this little consolidation. What are you reading there technically?
I don't think so, but again, you could find it if you're looking for a hard enough. And when you have to do that, the answer typically is, I don't think so. Here, yes, breakout, snapback, hammer, upward movement in price. All this looks good. This violation of support, cluster of moving averages, random price action. It's in one of those 50-50 scenarios where it wouldn't be surprised one way or the other. I think you got to have some data come out on Tesla.
Yeah, I think it's.
I will tell you, I've seen a lot of days like this where Tesla rockets. Like Tesla's, it doesn't have that shiny new car smell anymore.
It's leaving a lot to be desired here today as the market looks pretty healthy. The heat map, one of the red spots is that
maybe
Tesla,
Elon should focus on building his company instead of trying to be the Doji king of Twitter.
Yeah, less of that, Mr. Musk, please.
Get on, just get back on point, Elon.
Yeah, let's get production going out there.
What do we got to tell Elon every time he does this stuff? because he chases all the he's like that squirrel that chases all the nuts, right?
Uh-huh.
Okay, Elon, you got a job to do. Save humanity. Do your job.
That's right.
Dogecoin does not save humanity.
We need to get humans to Mars, bro. Come
Listen,
on.
I'm watching The Expanse. Elon, come on. Let's get there. We got to go to the outer rim. Let's go.
That's funny. All right. Next one here is Verizon. And, over the last 25 years, we've seen the rise and fall of many big tech names. We just went from Tesla, who's a huge company at this point. Some of the big companies out there used to be Yahoo and AOL back in the original tech boom that no longer played itself out that way over the course of 2 decades. About 5 or 6 years ago, Verizon bought those firms for about $5 billion apiece. They thought they could, get them reinvigorated, get them going again. Well, Matt, they gave up on that investment. They sold them, offloaded them to Apollo Global Management for $5 billion. They get to keep a 10% stake, and they're going to rebrand the entire company as just Yahoo, and AOL is now going by the wayside.
How much did they pay?
They paid about $10 billion for
I can't wait till they
total.
sell it for $5 billion in 5 years.
I know. No, actually, Apollo only paid $5 billion for this one. So Verizon
then
took
2.5
the loss. Yeah.
Yeah. At what point is buying these companies paid off? The failed 90s companies, like at what point is it paid off?
Everybody thinks they can just get them back
like
up
we're
and running.
We're just going to recreate the magic on everything
on Yahoo Finance. I know. I guess I don't know. Like Yahoo,
all right,
AOL.
tackle trading. Let's go buy a blockbuster. Let's do it.
Hey, listen. We could turn that into a meme stock before you know it. You watch. In 2021, I've seen crazier things. But AOL and Yahoo, Verizon moving on from these firms. Let's move into the last one, and then a couple other quick ones. But Apple Computer here next. It's in the headlines everywhere, but I think it's actually a nothing story until we see it play itself out for quite some time. But again, another round of the Fortnite Epic Games is suing Apple. They're in federal district court in San Francisco here today. Tim Cook is going to testify to some questioning. They don't have a jury. This is just a federal district judge who's going to be hearing the case.
They requested a judge.
Yeah, they got a judge here in this one.
It's
Matt,
the right move for both companies.
Is there any fire here? Is there anything behind the smoke that I'm seeing in the news headlines today?
Yeah, Fortnite wins.
Yeah.
But no, this storyline's been playing out for a while.
Mm-hmm. Even if Fortnite wins, aren't they going to appeal it again? Isn't this the endless thing?
The storyline won't be done ever.
Yeah.
Like when I mean ever, I mean never. It will never be done. It will be Fortnite this time. It'll be another one next time. Apple's a juggernaut. They're going to be hit over and over and over again, and they're just going to take it like a punch. Sometimes if people got to learn to take a punch, Apple knows how to take a punch, guys.
Mm-hmm. Mm-hmm. Yeah, whether it's in the U.S., the EU, doesn't matter what district we're talking
Apple's
about.
Apple's also won these cases.
For a long time. Yeah,
they usually win these cases too. So I don't know. I think it's a nothing burger, and the market has it right today. It's a nothing burger.
Yeah. All right. Last, let's see here. Maybe one or two more. Saw a few downgrades caught my attention. DraftKings caught an upgrade to outperform from Cohen, and basically citing that the price depreciation over the last couple of months puts it in an attractive place. I think that's speculation. That's somebody talking their book that they like the
Based
company.
On what?
I like the company too. But
I do too, but
I don't see this one.
What did they say?
Basically, they say that the price sell-off over the last month or two is put it at an evaluation that they like. They like purchasing it here based on their future growth expectations. So rampant speculation about the future.
Okay, hold on. I want to make it clear. There's nothing fundamentally different from 2 months ago versus today on DraftKings.
Nope.
Nothing.
Same story.
There's nothing.
The
only thing difference is the stock went from 74 to 56. That's it. Like there's no valuation should not be in that sentence, like at all.
That's right. No, this is a growth concept. It had nothing to do with valuation, quite bluntly. Although I do like the company. That just seems like talking book right there. A couple other ones.
Listen, DraftKings better post a number here.
Yeah.
Or that whoever upgraded is going to be looking real bad.
Doing it right in front of earnings, front running that a little bit.
Yeah, I mean, I like this story 6 months ago. I like the story 12 months ago. I like the story 12 months from now. I mean, you're still paying a premium for the speculative price, so it does seem like they're talking their price. I mean,
and for me, I think you can have a very similar analysis on DraftKings for earnings as you do Activision, right? You got to like it that it's around 55. I mean, 55 would be a good price point people would be looking at, an old support level here, double top, test. So I mean, 55 is an attractive number from a technical perspective. But what happens in the same conversation on Activision? What happens on a miss here?
Maybe I actually
It's not
get to
good.
buy shares at 35.
Maybe Mark actually gets his naked put at 35.
I've been stubborn on that. I will not buy unless it's at 35. That is my price that I'll
well,
pay.
and I'm not saying it's going to happen, but again, I have concern about Activision. They have not been performing with the market. I have concern about DraftKings. They have not been performing with the market. And don't get me wrong, like I'm not a big fan of DraftKings the same way that you guys are, but I am a massive, massive fan of Activision, and I have a ton of concerns with a company that is you have a specific opinion on, that is in a technical condition that could be very concerning if certain support levels give. And if 55 gives on an earnings miss, man, you could see some real nasty volatility in both Activision and in DraftKings. So there's no way I'm upgrading DraftKings in front of earnings after a sell-off that has not been performing with the market. And I'd like to have a conversation with the individuals who would do that, because they have a lot more courage than I do.
It's a head scratcher to me. It doesn't seem like the right time, the right condition to do it, especially based on what they noted. So as much
out
as
of
I
all
like
the companies in the
just,
market, I just don't understand why analysts do this. Out of all the companies in the market, why do you have to do DraftKings? We know why you do it, because it gets name recognition and it gets hits on your blog and it gets people because they click on things for DraftKings. They don't click on things for Pfizer, right? Pfizer saves the world, it goes up 13%. DraftKings signs a deal, it goes up 20. We understand how the game is played, but it's always a mistake to upgrade a stock in front of earnings. It is always a mistake.
I agree. And then the last one that got my attention, then we'll run through Commodity Corner here on silver. Interested to hear what Mark has to say about that market here in just a minute. FedEx and UPS both got the double whammy upgrade within their space, outperform from peer perform from Wolf Capital. And I agreed with this upgrade. This is post earnings.
I agree with that. I agree with that breakout of 300.
FedEx is looking great. UPS has already run like crazy. It's been an incredible performer. FedEx now just pushing towards its resistance zone. Just juggernauts here in the space, Matt, and industrials are an interesting area of the market to keep track.
Industrials are very, very, I don't want to say they're hot. They're very consistent right now, though. And you don't have a lot of concern about the industrial space right now. Transportation within the industrial space is extremely hot, though. And when you're looking at UPS going from 156 over the course of a 2-month period to 213, obviously that's going to be extremely overextended in the short term. And when you look at it post earnings, it's extremely overextended in the short term. When you're looking at FedEx here, not FDX, FSX, FDX. When you're looking at FedEx here, I don't have that same philosophy of being overextended. Yeah, you've ran pretty aggressive from 276 to the breakout of 300, but when you're looking at this, that's a pretty consistent trend going on. Had a little bit of consolidation before the breakout. Not a Frank special. He would have loved, 5 dojis in a row all ticking against 300. But you got to like that, and I don't feel this is overextended on the daily chart. Your RSI is only 60 on the breakout. That shows you got a tremendous amount of room to run. When you're looking at this on a weekly chart, very methodical looking trend here as you're approaching that $300 breakout, and specifically over the course of the last few weeks, real good consolidation between 276 and the top end of 290, 294. And so you did have your consolidation going into that breakout a little bit, get the breakout of 300, minimum FedEx on a watch list. I think UPS is too elevated. You're bar by barring, and I just don't like momentum bar by bar on a transportation company. But you got a legit breakout, in my opinion, on FedEx that could play some catch up to UPS.
And UPS has been the leader, and that looks like FedEx is, going to try to play that catch up.
Yeah, 100%. UPS is a juggernaut right now. Look at that consolidation breakout. again, look at that on the weekly chart. Look at the consolidation, look at the breakout, look at the price response. Yeah, UPS has had a good earnings report in that price response. They've had upgrades in that price response, but but you had that throughout this neutrality as well, guys. UPS didn't have bad reports in this neutrality. So you saw the breakout, and then everything just adds on to it. Looking at FedEx here, FedEx, a little bit of consolidation, looking at a breakout. Can we get the run? I don't know. If you had to pick one, boys, do you pick the momentum and probably the darling of UPS and bar by bar that, or do you look at that breakout on FedEx and think, you know, I could use swing trading mechanics, but really what I'm looking at is trend trading this weekly breakout on FedEx.
Mark, I'll let you go first on that. Last Tuesday on on this show right here, you had highlighted how much you liked UPS
I
as a
actually,
part of the Queen's
you
Core.
weren't here on Tuesday. UPS was my pick for the Queen last Tuesday.
And that was the day after the earnings. Now we've run 5 bars in a row here.
I thought the earnings, I mean, once again, I mean, most things I do, and I'll talk, you know, this will I'll highlight this a little bit more when we talk silver in a second, you know, is you develop an investment thesis, and then you're always looking at information that confirms, or it's like, oh, maybe I'm a little bit wrong or whatever. I liked UPS. I like the story of UPS. I like the transformational things that occurred during the pandemic to speed up certain things. And, you know, anyways, made my big case for UPS last Tuesday. And so, like, once you get in, you know, and hopefully you play intraday things, you break out. Once it's ran, and I like UPS. I mean, I talked about it for 15 minutes last Tuesday, how I like the long-term story. And so I like the long-term story. Now it's about finding short-term entries. And for when something's around 5 days like this, I gotta have a new entry. I gotta have something to give me a new entry, because I just hate chasing 5 days of momentum. And this is on a stock I really, really like. And so I gotta have something solidified to give me a classic technical entry.
Bar by bar would have worked here the last 6 days. It's been a big move. I would pick FedEx, Matt, out of the two based on the question you asked, just because it is.
I mean, I would go to FedEx too. Same story, better setup.
Yeah, just the setup and the entry.
You know, and again, outside of the last, I don't know what, week and a half, these two companies both been consolidating. UPS obviously post earnings ran. Right. And that's really what has separated it over the course of the last 6 months, is really the UPS earnings from last week. But technically, I think you got to love the $300 breakout on FedEx. That weekly chart's pretty legit breakout on that weekly chart. And again, the open question is, if UPS is real, and I think we all believe UPS's response is real, do you see FedEx catching up? And I personally see FedEx catching up.
Yeah, I mean, the two have a tendency to trade in similar patterns, right?
Yeah.
So,
yeah, one's not going to separate too much from the other one. It's like the Aussie and New Zealand dollar. They will move against one another. They have a 93% correlation status, so 7% of the time they kind of do whatever they want. But every now and then they will separate themselves. And right now UPS has separated itself from FedEx, but it's really only the last week of earnings. When you're looking at FedEx earnings, I got no problem with FedEx's earnings.
No, no, I think you can map something out here too. All right, very good. Love the conversation here, guys. Let's move into our last segment today. And Mark, we started last week with the commodity corner, and you had highlighted crude oil and energy stocks specifically as to what you were interested in. Energy had a nice little week there. Today, you are bringing silver to the show for this week's edition of the commodity corner. And if you guys out there and you're brand new to tackle trading or the community here, Mark is a real big believer of commodities, and he does our commodity report on the weekends for pro members at Tackle Trading. And so this is where, you know, your expertise is going to come in right here, Mark, and give us some analysis and insight into the silver markets. What do you got for us today?
You know, whether it is a penny stock or whether it is UPS or whether it is a commodity, if I'm doing short-term trading, I trade on technicals, and I trade on technicals exclusively because it's short-term. Anything else, I like to develop a thesis. And for about 4 or 5 months now on silver, I've had a similar thesis. And the thesis on silver has been pretty simple. When you look at things that do well in an inflationary environment, silver's up there, right? It's not number one, it's not number two, but it tends to benefit from an inflationary environment. But the main thesis that, and that's been a bonus, the cherry on top of the sundae, if you will. The main thesis behind silver, and I say it all the time, and the price action's been in the mud. But I'm like, I believe in the industrial aspects of silver. Like the precious metal aspects are there. And what I mean by this is that when we think of gold, it's a pure precious metal. Yes, does it have commodity use? Sure. But its primary purpose is a general hedge. It's a precious metal. Well, silver and the other precious metals, such as palladium and platinum, they're what we call these quasi precious industrial metals. P. Thomas has talked about this several times on the podcast. And if you ever want to just get into a good dive into commodities, go find some of the old Trading Justice podcasts where P. Thomas is a guest. He's been a guest 4, 5, 6, 7 times. And he talks about this industrial precious dual aspect to silver and platinum and palladium. Well, the one thing, and how many times have we heard over the last 4 or 5 months? The last 4 or 5 months is we're going to have the hottest economy ever, where the GDP growth is going to be amazing, and cyclical trends are going to benefit. Cyclical stocks are going to benefit, and we've seen that. When you look over the last 4 or 5 months, when you look at industrials, when you look at materials, when you look at the banks, when you look at energy, all of these areas have done very well. They might have taken the last month or off, but we've been in good trends, and it's very normal to take some time off. So the thing, semiconductors, another area of the cyclical area where economy is going to do good. Semiconductors have had an amazing stretch since the election. And so ever since the Pfizer vaccine news that came out post-election, you've had clear trends in certain areas of the market that have just been juggernauts percentage-wise. Semiconductors, industrials, materials, energy, finance, everything's been on cue. Just the playbook at work. Well, some of the areas, in particularly one area, because I always look like who hasn't joined the party yet? Because in this cyclical playbook, because of the industrial components to silver, got the precious metal aspect, but it's that industrial aspect. Silver hasn't joined this party yet. Silver, so many things in the playbook, cyclical movement, hot, overheated economy, everything's just on cue, ran just like they would in any cycle. 6 years ago, when we have this cycle again, rinse off and dust off the playbook and get into semis early, get into some of these areas. It's just a cycle. Well, silver hasn't participated in this. That industrial component that benefits from a hot economy, it hasn't joined in. Now, I think part of the reason it hasn't joined in, and this part is just speculation, is that we had the whole post GameStop Reddit board, let's try to push silver up. I think there was a backlash to that in January that helped subdue price when they tried to join in and manipulate a market. Now that's just speculation. But the plain and simple fact is we've been trading 8 months. So I've had this thesis, and along the way, I've been very comfortable selling naked puts on silver. Been very comfortable cash flowing because, I love the thesis. I think the thesis makes a lot of sense. And if it comes down, great, I'll buy more, I'll cash flow more, I'll cost average down. Now that really hasn't happened. We've traded sideways. So it's been a great cash flowing instrument, whether it's SLV or silver mining companies. I do a little bit of it all. And so it's been a great cash flow, and I don't expect that to change. Now, the reason I'm highlighting silver today is because whenever you have these ranges, and this has been a big, huge, massive range between 22 and about $30 for the last 8 months. And along the way, you find resistance levels and support levels that formed. You find short-term trends that occur. And I really think that whether the combination of inflationary and this whole industrial, silver hasn't joined the party, eventually it is. It's going to come into play at some point. And just like you see that UPS chart where you're like 5 days up, oh my gosh, what should I do? I think you're going to at some point, and I don't know if it's this week, I don't know if it's this month, I don't know if it's this summer, but somewhere in this cycle, I think you're going to have a stretch where people are scrambling, being like, I should get in now. It's at 29 or 32 or whatever. And what should I do now? I like to front run those movements when I believe in something, when I have a solid basis and I believe in the thesis. And I believe in this combination of this industrial hot economy benefits silver and the whole inflationary aspect. And so I believe in this already. And today I'm getting a signal. Now it's a strong candle. I wish it was a little more muted, but you don't always get what you want. And so I don't want to go chase silver like so many people do. Is, something's been up for 3 weeks or 3 months. They're like, now I should get in, because they're just chasing price. And so I've been on the lookout for a day that in this long rut of boring cash flow environment that silver's been in, which it has been, which is fine. Cash flow makes some money along the way. I've been looking for that candle that's like, I don't know if this is it, but I don't know that it's not it either. And it's one of those things where you broke out of those moving averages on the daily chart 2 weeks ago, and then you suddenly fell back in, and then you came back with strength. It's like this do-si-do that you do. What is the old do-si-do dance? Swing your partner to and fro. That first breakout, that first move up, when it doesn't work, you pull back a little bit, consolidate. That second, I call it a do-si-do. When it moves, it's a strong candle. It is the most interesting candle to me that silver has had since the post GameStop Reddit. Oh my gosh, let's do something. So it's been the most interesting candle to me in 3 months. And so I already have exposure to silver. That's primarily through cash flow. I think there's going to be a directional move at some point this year. Whether that's the start of today, that's the type of candle that could start that directional move, though. So there's a lot of reasons I've loved silver for 8 months from a cash flow. There's a lot of reasons I've really loved it post Pfizer vaccine. We haven't joined the party. I think it eventually will. That's my current thesis. Those are my current thoughts on silver, and today's candles why I'm bringing it in the commodity corner this week.
Okay. But first of all, very good analysis. Thank you for bringing some of your insight there. There's a couple of questions I would have for you before I get into some of my thoughts on it as well. Are you approaching this with the ETF SLV? Or are you playing silver companies? What is
I
your
do a little bit of
preferred?
each. There's a general correlation. The two primary ways I approach it is SLV, the ETF, super liquid. Like it's about it has about 100% liquidity. I mean, option chains are within the penny of each other. It's very liquid. I also personally trade AG, the silver mining company, as well. So those are my two ones that I enjoy trading from a silver perspective. The SLV chart is going to be almost direct correlation to the silver chart. So, because that's what it's designed to do, right? It's designed to mimic the price of silver itself. So I have more exposure personally in SLV, but I do mess around with AG a little bit as well.
There's many different things. Number one, I've always kind of been a proponent of silver, even going back to my teaching in the ballroom days. I love bringing silver coins. It's something, that Matt taught me about metals 10 or 12 years ago. I remember when I purchased my first silver coins. So physical silver has always been some part of my investment thesis and portfolio. I never move away from that part of it. The paper assets here obviously are heating up, and this is one of the better candles we've seen in quite some time. Silver's been wrapped up in a couple of different stories over the last year that were just not traditional around a metal like this. The craziness it went through last July, which had to congest there for about 6 months. And then it did get caught up in that Reddit stuff in January for a few days. I like silver long-term. I like industrial metals long-term. I love this area of the market from that perspective. And you're starting to get some clarity in the charts. I want to get Matt's thoughts though, because this is an area Matt's been tracking his entire investment career. Matt, what is your read here? And do you agree with Mark's analysis around silver?
I do agree. I think the younger brother to gold has a chance to shine here a little bit, and it might be it's going to be unfortunate. Gold's going to break 1,800, and that's all we're going to talk about. but I do think it has a chance to shine a little bit and outperform gold's price recovery. Mark, you said something that did interest me. You talked about how silver has not been participating in the industrial cyclical movement in the marketplace, and it hasn't. Whereas you've been seeing XLI, and let's take a quick peek here. XLI, robust trend, fantastic trend. Well, what's this trend based on, guys?
XLI's trend is based on the strength in the overall equity markets and
Well,
industrials.
yeah, but that's
Yeah.
everything. That's
Yeah.
everything. But it's based on what's the theme? It's based on the economy reopening up. It's
Okay.
based on vaccine and the vaccine distribution. It's based on, us getting back out to work. It's based on us building things. It's based on an infrastructure plan that's coming down the pike to the tune of $1.9 trillion that Biden talked about literally last week extensively in his first address to Congress. That's what it's based on. Well, silver has that kicker on it. Silver has that industrial metal kicker on it that gold does not have. And silver just simply, quite frankly, has not been participating in that run up the same way others have. And Mark, here's GameStop right here in February. That was the GameStop. That was post GameStop when they're like, hey, Reddit's going to take over the world and Reddit's going to become the #1 major player in the market. And yet we have not talked about Reddit since, because when they tried to do that on an instrument like silver, what was everybody's take?
We immediately like, listen, you guys are fools.
Get
You're
the
gonna blow
hell
up.
out of here. And it immediately made us hate silver simply because they were trying to co-op it.
No,
And we knew they couldn't. We knew they couldn't. Silver's way too liquid for that.
Mhm.
But just the attempt, every one of us is like, I don't want to mess in the same playpen of the craziness, right? I just don't want to do that. And I don't know if it had a role or not, Mark. I will tell you
never know.
personally.
I think it did.
It made me think about it because I hadn't thought about it like that in any capacity. And yet for me personally, in that time frame, I haven't looked at silver. And I usually do. But I haven't wanted to be a part of the Reddit storyline in any capacity. I like hot stove, stay away to a certain extent. And so maybe it did, maybe it didn't, but it did give me a little bit of moment of, that does make a little bit of sense to me. And so I just wanted to bring that up because it did make a little bit of sense to me. When you're looking at XLI, that same time frame, look at XLI. Okay, coming into February, you're just neutral. After February, XLI takes off. That's the cyclical movement. That's the vaccine. That's the first 100 days of the Biden administration. That's what everybody was talking about. That same time frame, XI or SI breaks out, and then what are all of us saying? Stop it, Reddit. Get out of here, Reddit. Go away. You had your fun with GameStop. Stay in GameStop. You want to co-op AMC? Good on you. High five. I'll even golf clap you. But keep your nose out of silver. And so industrials, Mark, ran from that moment on. Silver didn't. And silver has that kicker. So yes, it did make me think that maybe hypothetically there might be some of that there. You'll never prove it.
Yeah, you'll never know.
It's 100% speculative, but it does make a little bit of sense to me. The second thing about silver is when this little coin wants to fly, it catches up fast. It catches up fast. It's the Ethereum to Bitcoin, right? It's the Ethereum to Bitcoin. And so gold gets the headlines a lot of times. Silver, when the move gets made, it's quick. And then all of a sudden we're talking about chase. It's quick, and then we're just chase as it makes its ultimate run. You're looking at this silver here, and you do got a trigger here on SLV, on SI. You're looking at a very similar type trigger above that 2675 level on SI. When you're looking at SLV, you're looking at that trigger above 24.5, 24.65. So either way you shake it, you're looking at a breakout after some degree of short-term downward movement. And when you look at this in the ultra short term here, guys, pretty quick journey to the downside, but actually a fairly consistent journey to the downside. And I kind of like that about silver. You're talking about a market that goes from 26 all the way down to 23, 3-point movement. It then goes from 24.5 down to 22, slowing momentum as you get into that 200-day moving average. Instead of retracing it, tried it, snapped back, got gobbled up by the 200-day moving average on its first bearish retracement, came back up into the right shoulder, forming a head and shoulders formation with a fairly tight left shoulder coming in to coincide with the right shoulder at 24.5. You got a breakout. That's traditional. That's a traditional head and shoulders at the 200-day moving average after a short-term downtrend with the trigger of confirmation. That's a signal candle on a reversal. And so the question is, nobody ever knows what the future holds. And in the short term, we should see only 26 in silver, maybe on SLV 26, when you're talking obviously about its counterpart in silver, the parent there, you're looking at right around 26.5, 26.60. Either way you go about it, you're looking at confirmation. Now, for me, the best way to play silver is just to play silver, SLV. There's not a lot of stocks in this space that are silver stocks. You got literally Pan American Silver, which is the most liquid of the companies, PAAS. You got First Majestic, which Mark mentioned, AG. You got MAG, Mag Silver Corporation. You probably got Fortuna, which is FSM. Underneath that, you're talking about companies that are less than $1 billion. And so a lot of times the best way to play silver is just to play silver through the ETF. Gold has a little bit more ammunition to it in its stocks you can look at. And a lot of those gold mining companies also have silver kickers on them as well. So GDX would be, in my opinion, a way to get access to the silver movement as well. It's just not going to be as much percentage wise if the price movement is legitimate as you are going to get on SLV. So SLV, in my opinion, is the best, purest way to play the silver breakout if that is your thing. But taking a look at some of these stocks very quickly, the number one silver specific stock is Pan American Silver Corporation. You're looking at just a mess of a chart here, just an absolute mess of a chart, just wide range neutrality, about a 20% neutrality range when you're looking at it, wide range neutrality, very volatile within its range. The consistency happens at your top end of the channel and your bottom end of the channel. And what that tells you is, yeah, you can trigger above 34.5 here, but you're not going to get a pure movement here. It's going to be volatile. So what that typically means is you want to put that on a weekly chart and wait for all of these ranges to get blasted out, and that would eventually lead to a breakout of 40, which means Pan American Silver Corporation is not nearly as good, in my opinion, and this is just my opinion because it's my analysis, than SLV. So Pan American, no. Let's take a look at AG very quickly. Mark, this would be one of your specials where you're looking at a stock that is in an intermediate uptrend, a little bit of short-term weakness in that trend, but towards the lows here. Now, the trigger for me on AG would not be a buy the dip mechanic, although that is a legitimate analysis. It would be the breakout. Now, unlike Pan American, that is a gobbled mess of wide range neutrality, you're currently thinking about $16. You got a lot of mess between here and 17.5, but a breakout of 17.5 should see clear selling to $20. So do keep an eye on First Majestic. One that does have me interested here, and it's performing very similar to SLV, not as consistent as SLV, but individual stocks can fly, and we know how much they can fly, is Max Silver Corporation here. You know, good snapback coming off some volatility to the downside, came into that 14 handle, old support, old support, old support, little bit of a head and shoulders fill with the breakout. This would be the second confirmation on this potential reversal, whereas we're only seeing the first on SLV itself. A little bit of relative strength, in my opinion, on Max Silver, so I do think you want to keep an eye on that. Only problem is, it's a smaller company. I don't know exactly what the market cap is. It's around $1.5 billion, I believe. But you're talking about earnings coming up. Micro cap stock earnings, gross. I don't like that. Mark, you might like this, but only people that do like this type of chart would be your deep value type guys, and that's, you're looking at Fortuna Silver Mines. And this, once again, about $1 billion company, very similar to the other analysis: double bottom, double bottom, double bottom, double bottom, triple, quadruple. How many times is 1, 2, 3, 4, 5, 6, 7, 8? What's 8?
That's an octagon.
It's okay. We got the octagon of support. We got the octagon of support bounces here at $6 on Fortuna. What I like about Fortuna is cheap risk here. Easy stop loss placement right there in the 580 level underneath all those wicky choppy stuff. You could certainly see it, a repeat of the trend and pattern back up to 8. And so not as aggressive as some of those other trends that are actually bullish. This is more neutrality with a really, really, really good support handle. Once again, only problem, what do we got coming up?
Earnings on a lot of these.
Earnings can't do it, which means when you're looking at all the silver companies, the best way to play it, and if you would have just trusted me at the very first, is SLV.
I do like that analysis, by the way, going through each one of them. And it's not an octagon, it's an octuple, I think, is 8.
I liked octagon. It made me think you're having a fight in the MMA, like 2 MMA fighters are fighting for $6.
Listen, I see the classic octuple reversal pattern forming. So
well, now I'm starting to think this is like what is that channel? TLC channel, where they have like 20 kids and stuff like that.
Yeah,
we're getting into that version of analysis.
And we got 8 support points on FSM. That was a Mark special, though. When I looked at that chart, Matt, I'm like, that's Mark. Of course.
How do you not think of Mark when you look at FSM?
Long-term support bounce. I don't know if you even saw that.
I love that reversal signal. I mean, but once again, I analyze that kind of stuff from cash flow perspective. So
support.
I'm gonna tell you what, that could get gobbled up if it wasn't for that earnings report.
Yeah.
I actually kind of like the neutrality is very consistent.
Yeah, it's been consistent for a long time.
And honestly, I mean, when you look at the kind of the performance here on earnings, you're in the middle of the range, little volatility. Earnings, you're at the top end of the range, sell off. Earnings, you're at the bottom of the range, buy. I mean, I should put this in, man. I should put this in the next version of whatever class we create on earnings. Look at FSM. Responses. When you're at the low price, response goes up. When you're at the high price, price goes down. It's almost like it's done before.
Yeah, history repeats itself. Final thoughts on the segment there, Mark, and silver in general. Go ahead.
No, I mean, just listen. I mean, I love when you believe in something, right? And believing in developing a thesis is the first step. But then you got to know how to match the strategy you're using with the instrument you're believing in. Because, if you get a major support level break, you might believe in it, but you need to buy protection or roll those calls down or do something. And then for silver, it's been cash flow. It's been easy. It's cash flow. Listen, that's a directional signal today. And so if I had calls, maybe roll them up and out on that signal. Match you can believe in something, but use what the chart is telling you to use the appropriate strategy to match what you're seeing.
All right. I love the commodity corner, by the way. We're going to be doing this on Mondays where we highlight different commodities as they come into focus in the marketplace. Last week was energy stocks. This week was silver. And as always, Coach Mark, thank you very much. A great job here today, guys.
And now we're going to talk trash that makes cash. And
well, the screen's now down, so we're not going to do that. We're going to wrap up, get final thoughts. Marky, final thoughts for the team out there. What you got?
Listen. I mean, when I was doing with the Sunday prep class, one of the things I shared was, the different banks, right? And they're all over the map on what's going to happen this summer. Some are saying, hey, Credit Suisse, let's jack up that S&P price target for the year to 4,600. People like Goldman saying, I don't know, maybe sideways. Wells Fargo's like, sideways. JP Morgan out there saying, buy. Listen, there's not consensus. No, nobody's bearish, but there's no consensus. Let the technicals do the talking. People have a lot of guesses out there on what they do. Let the technicals do the talking, and you're going to have a pretty good summer, and there's going to be plenty of opportunities.
Maddie, final thoughts from you, sir.
Oh, Mark made me, somebody said trash, and we haven't been doing trash that makes cash because it's trash, but it did make me think of the trash stock. Now it is not a $5 less company, but it was a month ago, so I'm going to cheat. SVM, Silver Core Metals Company, the third smallest company, coming in at a market cap of $928 million. Traditional head and shoulders formation here with a breakout now on top of all its moving averages. Mark, what do you think of that reversal here?
Well, I mean, the thing about it is, here's the thing. And my knowledge on smaller price stocks is like what is an eight? What's 8 things again?
We're calling it an octagon because the MMA fighters.
Octuple.
Yeah, we're throwing it into the octagon.
In the last 6 months, my knowledge of $5 stocks and less has octupled. In studying this area of the market. And the one thing is that if silver, like percentage returns, now the bulk of everything I have is going to be in SLV or one of the bigger mining companies, but there is like when an area of the market gets hot, some of the cheaper stocks in that area can have really, really good runs, really percentage wise outperform. Now, and so I will look at some of these from a trading point of view, just knowing how some of these smaller, cheaper stocks, if an area of the market gets hot, and we're not there yet on silver, but if an area of the market gets hot, some of these cheaper stocks can have outsized returns in the area.
I knew Mark was going to have my final thoughts for me. I knew it.
It's always nice when
I
that happens.
enjoyed every second of it. Final thoughts for me very quickly. We got Trade Justice podcast coming up. We're going to discuss sell in May and go away. And if you like detailed conversations, definitely check out the Trade Justice podcast later on today or on your commute tomorrow.
Yeah, and we cut that podcast each and every Monday. We'll have more information on it tomorrow. If you're
Coach
brand new,
Gino on the show today.
It's going to be fun to always talk to Gino. Always a
It
great
is
time.
always fun to talk to Gino.
Out there, Team Tackle, you guys are the absolute best. I loved the conversation today. A lot of good back and forth in there in the chat. Keep that up, guys. We'll be back
Tim doesn't
tomorrow.
allow me in the YouTube chat anymore, but I miss you guys and I love you guys. You guys are the best.
You guys are the reason we do this stuff, guys. There's no question about that. Appreciate you all the way. If you ever need anything, team@tackletrading.com. And if you are not yet a pro member, I dropped a link to our 15-day trial. Come and join us in our community and see what we're doing on the back end with our webinars, courses, and educational content. Guys, we're out for today. We'll see everybody tomorrow.